Hey everybody, I'm Zac.
And I'm Jesse.
And you're watching In Depth.
On Now You Know. We are brought to you by abetterrouteplanner.com, our favorite EV trip planner with waypoints. Use our link in the show notes below to get a 30-day free trial to the A Better Route Planner premium app. Plan your next EV trip with abetterrouteplanner.com.
And we're sponsored by our friends at the solar-powered hotels in Schaumburg, Illinois, the Fairfield Inn and Suites by Marriott, and the Town Place Suite Hotel right next door. They're both connected, and they're both solar-powered. Now, our viewers are smart, and they love to learn.
Brilliant is the place that you go when you want to learn and strengthen that brain of yours.
Brilliant is a website and app that makes learning easy and fun.
Their approach is based on problem solving and active learning.
Their courses are laid out like a story and broken down into little pieces so that you can tackle them a little bit at a time.
And there's no tests or grades. Just pick a course on something you're interested in and jump in.
If you make a mistake, it's no big deal. You just check out the explanations to find out more.
Whether you want to just brush up on the basics of algebra, learn programming,
or learn about cutting-edge topics like neural networks, Brilliant has you covered.
And Brilliant makes a great holiday gift.
Yeah, give the gift of learning. To support our channel and learn more about Brilliant.org, go to brilliant.org/nowyouknow and sign up for free.
And also, the first 200 people that go to that link will get 20% off the annual premium subscription.
Hey, before we get into the show, I just want to say I like your t-shirt.
Oh, I like your t-shirt.
Thank you. You can get them at EcoWare.
Come sail away.
We're going to be talking about mining stocks in this episode, and please keep in mind that Jesse and I are not financial advisors.
You shouldn't take anything we say on this show to be financial advice. You should always do your own research. And you can do some of that research on our Now You Know Investor Club.
Yeah, go to patreon.com/nowyouknow to find out more. All right, so welcome to the show. On the last two in-depths, we covered all the EV companies that you can invest in.
And all the EV tech companies like batteries, LiDAR, and autonomous companies that you could also invest in. So I guess we've covered it all.
Not so fast. There is another way to invest in the EV revolution that's underway.
Oh, you could short gas car OEMs.
You could do that. We actually have a Slack channel on our Now You Know Investor Club Slack that's talking about just that. But no, I was talking about investing in mining companies.
Mining companies? Why? Who cares?
Because as we ramp up EV production, manufacturers are going to need lots of these.
Right, that's why we told everyone last week about battery companies to invest in.
But to make these batteries, they're going to need raw materials. So as we speak, there are mining companies out there that are working hard to provide these minerals.
Okay, but I know nothing about mining stocks. I wouldn't even know what materials are needed.
Luckily, I got a mining expert to help us. Eric Desaulniers is the founder, president, and CEO of Nouveau Graphite Mine near Montreal, Canada. Eric, thanks so much for agreeing to help us.
Thank you very much, Zac. Thank you, Jesse.
So since we have you here, I've been thinking about, what if Zac and I wanted to start a mine? We have a pretty good sized backyard.
First of all, you need to have resilience yourself and be ready for a long journey. And the journey starts, ourselves. My background is geophysics. I have an undergrad in geology and a master in geophysics. Graphite is conductive in the ground. So in 2012, I had the idea, let's find the next graphite mine because the one we have in North America is running out. So we started by exploration. So what we did is exploring, close to 1 million kilometers square. So very large territory in southernmost Quebec surrounding the mine of Fimris and making sure we are discovering a large deposit. So from 2012 to 2015, we had very patient shareholders who really believe in the technical approach we had, like the Caisse de dépôt, FTQ, and early stage speculative investors. And then we discover many showings. We call it a showing. So you go on the ground and you find graphite and you get excited. After having surveyed it with an helicopter, you have an anomaly, you go on the ground, but you don't know the size. You don't know, is the metallurgy good? Can I extract the flake graphite efficiently from the ground? So you need to do trenches or drilling and just to figure out what is the size. And while you're doing that, you're doing also metallurgical testing, making sure with a flotation circuit, an easy process, you can extract the flake. So it's a long process. So 2015, we discovered a deposit. We've invested roughly $10 million in drilling it in all directions for 2 kilometers. Every 50 meters, we put a drill hole and we define a resource. Then we know the resource is big enough. We do an economical study on it. So we do a preliminary economic study in 2016, pre-feasibility study 2017. bankable feasibility study 2018, and now you need permits. So when you start doing the permitting, it's a 4 or 5 years process. So in 2016, we started to do all the characterization of the ground. What type of frog, what type of mushroom, what type of trees, what will be and what is the characterization of the site. And then after that, what will be the impact of my mining project in that environment. So it takes an awful lot of time. It was about 10,000 pages on 4 years, a lot of modeling, a lot of studies, and we will get the permit pretty soon, like after 4 years and a lot of investment. And we started a small demonstration plan as well. So we're now close to $70 million invested in the project to prove that we can do the right metallurgy, we can qualify our product with customer, and also that we won't have a major impact on the environment, on anything. So that's quite a process, actually. So that's why actually companies like the cell makers, I'm not sure they understand the level of challenge they will have in the next few years when there will be a bottleneck on mining projects. Because us, from 2015 to full-scale production in 2023, it's 8 years, and it will be in Quebec, like unseen how quick it will be developed. The average is more 12 years. So it's quite a process, and especially in the Western world where the laws are defined and it's a really well understood environmental process. It's a long process, but it's understood, especially in Quebec where mining is something with a lot of experts. So it's quite a process, Zach, and good luck.
Okay, well, I guess we're not going to be doing that.
Yeah, I guess no mining for us. I guess we should probably be investing in real mining companies. I guess my first question for you, Eric, is what minerals go into an EV battery?
Yeah, I think for mining, if you want to invest in mining, the biggest minerals out there is probably nickel. Nickel is really big in mining. It's bigger than the typical lithium or graphite. So nickel is very interesting. There's a large nickel company. And the challenge in lithium and in graphite is there's no large mining company that are pure plays into graphite and lithium. There's only actually Chinese companies, so it's different. In nickel, there are advanced large companies that are mining nickel since a long time, so it's a bit more mining. But the challenge for you probably, Zac and Jesse, is just, is it a real deposit or not? So you need to make sure that yes, you want to invest in the team in lithium, but you need to make sure, is there a resource? And there are regulations on different stock exchanges. So there is the JORG resource in Australia on the ASX exchange. There is the 43101 regulation in Canada. I would say in the US, the challenge, the reporting issuers in USA are not regulated under any of very strict mining regulations. So it's an added challenge for investors in the US, I must say.
Okay, so we should be looking for nickel, lithium, and graphite mining companies. Is there anything else that we should be looking for?
Copper. In an electric car, there's much more copper than in an ICE car. But the copper market, it's a much bigger market. It needs more growth to move the needle. So for nickel, it's roughly a 2 million ton a year market. So now we're expecting 1 million ton more needed of nickel by 2030. So it's a 50% increase roughly. So it is significant. For copper, yes, it's an interesting growth, but it's not as much impactful compared. On graphite, for instance, for flake graphite, it's a 800,000 market today, and we need 3.5 million ton more by 2030. So the impact of this revolution on graphite is tremendous. Same with lithium. It is transforming this niche little market into something more commoditized, and where really it will get bigger.
Oh, so that's an important point. So, I mean, copper is already a big market, but as Eric said, graphite and nickel especially are kind of niche. If we could find smaller mining companies and invest in them before they became big, we could make some really good returns on our investments.
Yeah, when I was getting into mining companies early a few years ago, I thought I'd play it safe and invest in some big companies like Albemarle, Vale, and SQM.
And we're going to be covering these later in the show.
But I guess my question for you, Eric, is what do you think of my earlier strategy to invest in big companies like that?
The mining part of it, it's halfway through it. So Albemarle, SQM are more like chemical companies. So there's a lot of processing that need to be understood. And as well as the mining need to be understood, everything need to be working right. So that's even more challenging to invest in the battery material space.
Okay, so as Eric said, big mining companies aren't a pure play on EVs. They're more like chemical companies, but they do have earnings that you can measure, and they're not as risky as smaller mining companies.
So let's dive in and see what big mining companies there are in the EV space.
All right, so first up is Albemarle Corporation, ALB on the New York Stock Exchange.
They're founded in 1994, just like me, and they IPO'd in 1994. I didn't IPO. They split off from Ethel Corp. Their CEO and president is Luther C. Kissam.
They have about 6,000 employees worldwide. They're based in Charlotte, North Carolina, and their market cap is $15 billion.
Wow. The minerals that they mine are primarily lithium and bromine.
They have revenues in 2019 of $3.5 billion and a net income of $604 million.
And you can check out the 3-year stock chart here, and we do hold stock in Albemarle.
Yeah, so Albemarle is the largest provider of lithium for EVs outside of China. And coming up, we'll be talking about Piedmont Lithium, which operates here in the U.S. And it turns out that Albemarle actually owns a depleted lithium site in the same belt in North Carolina as Piedmont Lithium does. And so Albemarle may be testing to see if they can locate more lithium there. Because the way that mining works, I've been learning, is, there's usually bands of these materials, and you own a few sites in that band. But then after you've depleted them, you may be able to go back and find some other areas close by that you could begin mining in again.
It's kind of a weird thing with mining. It's not like setting up a factory where you set it up and then just people kind of go to work every day and stuff goes in and stuff comes out. Nothing is really going in besides, energy and people. And what comes out is stuff that's in the ground. And once you run out of that stuff in the ground, there's no more stuff.
Right. All right. The next big company is Sociedad Química y Minera de Chile. And it's, I usually call it SQM because that's their ticker symbol on the New York Stock Exchange.
They're founded in 1968. They became public in 1983, and they IPO'd in 1995.
Their CEO is Ricardo Ramos. He's been the CEO since January of 2019.
They have approximately 5,800 employees, and they're based in Santiago, Chile, and they have a market cap of $12.6 billion.
So the main mineral that they mine that we're interested in here is lithium carbonate, and that is from brine. And so they started doing that in 1997. They currently mine about 70,000 tons a year, and they'll soon be upping that to 150,000 tons a year because the demand for lithium is going up. And they had revenue in 2019 of $1.9 billion.
And you can check out their 5-year stock chart here, and we do hold stock in SQM.
All right, so SQM gets their lithium by pumping lithium-rich brine out of the ground into these shallow pans where the water evaporates, leaving sodium chloride, which is just salt, and that's separated and discarded. So then they go on to sodium-potassium chloride ponds, and then potassium-magnesium chloride ponds, and then a final pond process. So the whole process takes between 15 to 18 months from when you pump it out of the ground to when you get something that you can ship off to the manufacturer.
So that's interesting because I thought you said that Albemarle had a depleted mine. That means that they were digging it out of the ground. They weren't brine ponds.
Yeah, there's 2 ways to get lithium, 2 major ways. There's spodumene, which is the way Albemarle gets their lithium, and that's basically right there at the surface. You just need to kind of gather it up and do some processing to it. And then there is the brine deposits, which you have to go down, pump it out of the ground, and put it in these pools.
Interesting. So there's 2 different ways to get lithium.
Right. Another interesting thing to note on SQM is that in 2018, China's Tanqi Lithium Corporation bought a 23.7% stake in SQM. So it's kind of a China play there as well. All right, the next big mining company on our list here is Vale, and it goes under the ticker symbol VALE on the New York Stock Exchange.
They're founded in 1942. They IPO'd in the year 2000. Their CEO is Eduardo Bartolomeo, and he became CEO in April of 2019. They have roughly 80,000 employees, and they're based in Rio de Janeiro, Brazil.
They have a market cap of $83 billion, and they're the largest iron ore and nickel producer in the world.
Their revenues of just the third quarter of this year were $10.7 billion.
Here is a 20-year stock chart, and we do hold stock in Vale. So Vale also produces a lot of other things like manganese, ferroalloys, copper, bauxite, potash, kaolin, cobalt, and they're currently operating 9 hydroelectricity plants, and they have a large network of railroads, ships, ports, and so forth that are used to transport their products. And they operate in 30 countries. So like what Eric said, you're not getting a direct play into any of these particular minerals. You're just basically buying this giant conglomerate company.
And that's not necessarily a bad thing. You have some kind of built-in diversity in that one stock. The only problem is if you were expecting, say nickel to go nuts, Vale might grow in valuation, which could lead to high returns for you. But a company that was solely focused on nickel might have higher proportional returns, meaning that it's kind of a bigger risk, but there might be a bigger reward if you choose a company that isn't Vale.
All right, the next big company here is Livent Corporation, or LTHM, on the New York Stock Exchange.
They were founded in the 1940s under Lithium Corp of America. They IPO'd in 2018, and their CEO is Paul Graves.
They have about 800 employees, and they're based in Philadelphia, Pennsylvania, with a market cap of $2.5 billion.
Livent just recently started production, and they sold lithium hydroxide, actually 1,000 metric tons of it in Q3.
Yeah, and their revenue in Q3 was $72.6 million, with a GAAP net loss of $11.8 million because they're just starting up.
And you can take a look at the stock chart here, and we do not hold stock in Livent.
Funny thing here is that Livent, under their old corporation name, they sold Sony Lithium for their handheld camcorder batteries back in 1991. Now they have manufacturing in all of these places, and you really get a sense that everything hinges on EV demand for this company to do well.
Because unlike, say, Vale, this is much more focused on specifically lithium, instead of being like, well, we have every kind of mineral you can take out of the ground. So if one does poorly, we have all the other. Like, it's very focused on lithium.
So this is an interesting company because we put them in with the big cap companies because they're worth $2.5 billion. But that's because they already had a mine and they just had to, kind of restart it up when the prices of lithium made it worthwhile doing. Unlike other junior mines, which have to go out and find lithium and start that process. And so this gives you some idea of what a active lithium mining company could be worth when all cylinders are firing.
So what you're saying is that Livent had a leg up here, that they were already ready to start mining lithium out of the ground, whereas a lot of the junior mines that we're going to talk about later have the lithium in the ground, but they aren't ready to start mining it yet.
Right.
So this is kind of a premonition of the future, if you will, of what these companies might look like.
Next up is Glencore, or GLNCY, or GLNCH on the over-the-counter gray and pink markets.
They're founded in 1974, and they IPO'd in 2013.
Their current CEO is Ivan Glassenberg, but he's stepping down. He's been CEO since 2002, so I think he probably needs to retire or move on.
The company is based in Bar, Switzerland, and they have a market cap of $42 billion.
So again, this company's into a lot of minerals: nickel and cobalt, copper, zinc and lead, ferroalloys, aluminum, iron ore, coal, and oil.
In 2019, they had revenue of $215 billion.
Here's their 10-year stock chart, and we do not own stock in the company, and the main reason is they're also an oil and coal company, and I just can't bring myself to pull the trigger on that.
All right, so those were big companies with proven earnings. But now a question for Eric. I'm kind of afraid to invest in these smaller companies because they have no earnings. Normally, if you see companies valued at this level with no earnings, it could be a scam. What do you look for instead of PE ratios and such?
Yeah, actually, you need to look at the future earnings and how much capex is needed to get to that earnings and what dilution it will do on the shareholders. So that's what you need to look at when you look at mining project. And also, realistically, when will it be in production? Permitting is key, and sometimes permitting is overlooked by a company, and they do have a resource in the ground, but they didn't start the permitting. So for a fact that they won't be producing anytime soon if they didn't start properly the permitting. So there's quite a lot of few things to look at, and for sure they will have zero earnings until they are fully in production, and then boom, big earnings, 100 million a year. So that's a challenge when you're a newcomer in the mining industry.
It's funny because mines can base their valuation differently than most other companies, where they have a certain technology and they need to start production of a particular product that maybe consumers are going to buy or someone else is going to buy to use, and maybe it would get outdated. With mines, it's a bunch of stuff in the ground that you're going to be scraping up and giving to people. So that's a completely different way to look at it. And that's why the valuation of a company can be so much more set in stone, so to speak, because it's literally in the ground. And if those materials are in the ground, as you say, according to the lengthy reports that you have to do, well, then I guess that company's going to be worth money. The question of what is this company valued at is more a question of what is the price of the material, how efficiently can you extract it from the ground, and stuff like that.
Right. So let's get into the mid-cap and smaller mining companies. All right, so first up is Nemaska Lithium Incorporated, or NMKEF, on the over-the-counter exchange.
They were founded in 2007 and they IPO'd in 2011. The CEO was Guy Barassa, but he just stepped down in February.
Yeah, they have about 60 employees, and they've got the Whabouchi mine in northern Quebec, Canada. I like saying Whabouchi.
They have a market cap of 101 million. Again, we're talking orders of magnitude smaller than some of the other companies that we've been talking about.
And they do lithium spodumene mining. And they also have a conversion plant to turn that into lithium hydroxide at an expected rate of 2,800 tons a day. And they have a revenue of 0 at the moment.
And again, that's because they're not pulling anything out of the ground. And we do not hold stock in Nemaska.
And I included this company because it's kind of a cautionary tale. They filed for creditor protection in December of 2019 because of cost overruns and lower lithium prices.
Wait, that doesn't sound very good. What does that mean?
Well, so Nemaska has completed its sale to some investment groups, which will form New Nemaska Lithium. And to our understanding of the court documents, current shareholders of Nemaska will not hold any share value after the closing. So I would stay clear. This is basically a reorganization after a bankruptcy, and you never know what's going to happen when a company reorganizes. Sometimes it can come out stronger. Sometimes it can come out so that current shareholders don't get any value.
Wait, you're saying that Nemaska, the company that you can buy right now on the stock exchange, you could buy it, you'd have shares, you'd have put money into the shares, and then basically the shares are going to be worthless because the company was able to just move all the assets out of the company without the shareholders getting any value?
That's what bankruptcy courts are for. And so this bankruptcy court decided that was okay to do. And so, yeah, existing shareholders, it looks like, from my understanding, will have no value in the company. Basically, when you're investing in a company, keep in mind that the most you can lose is all of it.
Everything that you invest in the investment could go away if the company goes bankrupt.
Right.
Interesting. It's just funny because there's still stuff in the ground.
Well, and they're going to keep going on as a company. It's the new Nemaska Lithium Mining Company. It's just not going to have the existing shareholders on board.
And so this is kind of scary sounding for people who might be thinking in investing in junior mines because, well, it's a risk that this could happen to pretty much any of the companies that we're talking about. But the thing to keep in mind is that the risk of you investing all of that money into something is that the potential upside could be much greater in value than what you invested to begin with.
Exactly.
So that is the risk reward that we're talking about. And Nemaska is a great example of the risk.
Next company is Standard Lithium, or STLHF on the over-the-counter exchange, or SLL on the TSXV.
They're founded in 1998 and they IPO'd in 2017. Their CEO is Robert Mintak. They're based in Vancouver, Canada, and they have a market cap of $212 million.
So for minerals, they're looking at a phase 1 lithium planning for production in 2022 of 9,700 tons of lithium carbonate a year, and they currently have a revenue of 0.
Here is their 3-year stock chart, and we do hold stock in Standard Lithium.
And they have operations in Arkansas in the USA, which commenced in September. Standard Lithium has a YouTube channel, which I think is kind of smart. That way you can kind of follow what's going on with your company by going to their YouTube channel. Next up is Talon Metals Corporation, or TLOFF on the over-the-counter, or TLO on the TSX.
They're founded in 2005 and they IPO'd in 2019. Their CEO is Henry Van Rooyen. They have about 15 employees and they're based in Tamarack, Minnesota.
They have a market cap of $142 million, and their minerals are nickel, copper, and cobalt. So they have an 18-kilometer strike length. So that's the area where they're looking for these minerals. And so their big play here is that they have a mainly green nickel sulfates for EV batteries. So they claim that when they pull their nickel out of the ground, they're doing it in a green way.
And their revenue is essentially 0. You can check out their stock chart since inception here. And we do hold stock in Talon Metals.
It's interesting to note here that 8% of the 2.4 million tons of global nickel production was directed to lithium-ion batteries. Demand for nickel in EV batteries is going up about 6 times by 2029. And only 42% of the nickel that's currently mined is good enough for EV batteries. You have to have a very high purity rate. And Talon's Tamarack project is one of only 3 21st century high-grade nickel sulfide discoveries. Estimates are that we need 36 new multi-billion-dollar mines to keep up with demand. So when we're talking about nickel, it's a lot like what Elon said at Battery Day. We are nickel-starved because there's so much nickel that goes into these EV batteries.
And that means a big opportunity for people who can pull it out of the ground and sell it.
Exactly. Next up is Canada Nickel Company Incorporated, or CNIKF on the over-the-counter, or CNC on the TSX.
They're founded in 2019, and they IPO'd in July of this year. Their CEO is Mark Selby. They have about 10 employees. They're based in Toronto, Canada, and they have a market cap of $115.8 million.
So obviously, Canada Nickel, their mineral is nickel sulfide. They raised $13 million in a financing deal that closed on October 14th, so they've got some money in the bank. And here's a look at their 6-month stock chart.
And we do hold stock in Canada Nickel.
Now, you might be wondering if Elon's plea at Battery Day made an impact on companies. This chart from their presentation deck shows that it did. They are actually quoting Elon in the deck. The Crawford site is the largest nickel sulfide discovery since the early 1970s. So again, if you're looking for companies that have big deposits in the ground, this could be a big one. But it's risky in that this still is a kind of an early stage. They still have to do more financing to get to the next steps. And as Eric pointed out, there's lots of regulations and environmental studies to get it out of the ground.
But if you were long on nickel, this could be a good long play.
Next up is Karora Resources Incorporated, or KRRGF on the over-the-counter, and KRR on the TSE exchange.
They were founded in 2006. They IPO'd in July of this year. They were formerly known as Royal Nickel. The CEO is Paul-Andre Hewitt, and they employ 175 people, and they're based in Toronto, Canada.
They have a market cap of $409 million. And get this, their main mineral is actually gold. So I got into this company last year when I was thinking about nickel, and they were called Royal Nickel. And then as I did more digging, I found out that a very small portion of their revenue comes from nickel. Most of it comes from gold. In fact, in Q3, they mined 24,000 ounces in Western Australia. So they sold their 28% interest in Dumont Nickel. And currently, their only nickel claim is that they've got a small deposit of nickel that they found next to one of their gold sites. And here's a look at their 3-year stock chart. And I would say that even though we do hold stock in this company, there's no real reason to buy into them for anything to do with EV batteries other than if you want a gold company.
But it's gold, you see.
It is gold. Next up is Giga Metals Corporation, or HNCKF on the over-the-counter exchange, or Giga on the TSXV exchange.
They were founded in 1983, and they IPO'd in 2014. Their CEO is Mark Jarvis. They have 25 employees, and they're based in Vancouver, Canada.
They have a market cap of only $29 million. The minerals that they're looking for at their Turnagain mine is nickel and cobalt. And they say that they'll be able to mine 33,000 tons of nickel per year over 37 years, but it won't be ready until 2026 because we're in the early stages with this company. They have 2.3 million tons of nickel in the ground and 141,000 tons of cobalt in the ground.
They don't really have any revenue, but take a look at their 10-year stock chart. You can see the bump because of Battery Day, and we do hold stock in Giga Metals.
Yeah, that bump there is basically there's a lot of speculation that maybe Elon was buying the company or had some kind of deal going on because nickel is one of their plays. But keep in mind, it would take years to get the nickel out of the ground that Tesla needs. Next is Grid Metals, not to be confused with Giga Metals. Grid Metals, or MSMGF on the over-the-counter, or GRDM on the TXV exchange.
They were founded in 1997. Their CEO is Robin Dunbar. They have about 10 employees, and they're based in Toronto, Canada.
Now, if you look at their market cap of $7.8 million, you'll see that they're very tiny. So their minerals are located on 3 properties. They have nickel, copper, palladium, and platinum on those 3 properties. But again, this is a junior mine. They've just located these minerals. They haven't done anything about getting them out of the ground yet.
They don't have any revenue, and they only have about $1 million Canadian dollars in cash on hand.
Here's a look at their 10-year stock chart, and we do hold stock in this company. So this, again, is an advanced stage exploration company at the moment. Very risky, but it could have high rewards. Next up is Leading Edge Materials Corporation, or LEMIF on the over-the-counter, or LEM on the TSXV exchange.
They were founded in 2010, and they IPO'd in 2012. Their CEO is Philip Kozlowski, and he just started this year. They have about 20 employees, and they're based in Vancouver, Canada.
They have a market cap of $45 million. And the minerals that they're looking at are graphite from the Waxna mine in Sweden, rare earth elements at the Norra Kar mine in Sweden, and lithium at the Bergby lithium mine in Sweden, which, by the way, they're selling, so don't really count that. And then lastly, nickel and cobalt at the Bihor Sud mine in Romania.
They currently don't have any revenue. You can take a look at their 10-year stock chart, and we do not hold stock in Leading Edge Materials.
Next up is Nouveau Graphite, or NMGRF on the over-the-counter, or NOU on the TSXV exchange.
They were founded in 2011, and they IPO'd in 2013. The CEO, founder, and president, who we're talking to today, is Eric Desaulniers. They have 55 employees, and they're based in Saint-Michel-de-Saint, Canada.
Yeah, that's about 150 kilometers north of Montreal. They have a market cap of 133 million. And again, the minerals they produce is graphite. They projected 100,000 tons per year production with a 97% purity for 26 years. So basically right now, the sale price of graphite raw is $1,500 a ton. And it costs Nouveau Monde about $400 a ton operating expenses to get it out of the ground. But the interesting point here is that the value of the graphite goes up to $6,800 a ton in 2021 when Nouveau Monde brings online a bunch of other facilities which will upgrade the raw graphite to a battery anode material.
The revenue in 2019 was $14 million. And you can take a look at their 3-year stock chart, and we do hold stock in Nouveau Monde.
Now, retail investors own more than half the shares in Nouveau Monde, which I take as a really good thing. It's the only graphite mine in North America, and it's the largest in the Western world.
And as we talked about before, graphite is a major mineral needed in lithium-ion batteries.
Yeah, as Elon said, the lithium-ion battery should probably be called the graphite nickel battery because those are the two major materials in it.
And lithium-ion batteries are expecting an annual growth of 20 to 25 terawatt hours in the next 15 years.
Yeah, Tesla's Battery Day pointed to a 12 times increase compared to current battery market size.
And one of the things that I really like about Nouveau Monde is that they are an all-electric mine. They are going to be mining this graphite using all-electric equipment, so there's not going to be any diesel trucks spewing pollution into beautiful northern Quebec. I really liked a few years ago when we met Eric. He was driving his Model X to go visit his property. He really understands this whole game in terms of batteries and Tesla. I think that he's really ahead of the curve, and you can see it in the 60 electric vehicles that he's going to be purchasing for this mine.
As you can see here on the slide from their deck, there's going to be a graphite shortage by 2023 that not many people have forecast, and so the prices should be going up because there's a graphite demand going up as EVs go up. Another play into graphite would be Talga Group Limited, or TLGRF on the over-the-counter, or TLG on the Australian Stock Exchange.
They were founded in 2009 and they IPO'd in 2010. They don't have a CEO, but their chairperson is Terry Stinson, and their COO is Martin Phillips. They have 27 employees and they're based in West Perth, Australia. They have a market cap of $374 million.
So they have a graphite mine in northern Sweden where they plan to take 19,000 tons a year out of the ground for 22 years, starting in 2023.
Which means that they don't have any revenue currently. You can take a look at their stock chart here, and we do hold stock in Talga Group.
I like them because they have partnerships with Bentley, Bosch, Jaguar, and Land Rover. And like Nouveau Monde, Talga wants to move up the supply chain by coating their anode, which increases the value of their graphite. Talga claims low emissions because they're more energy efficient than other graphite producers. And here's their timeline. So the big key here, though, is that they're not getting graphite out of the ground until 2023. So Nouveau Monde has a leg up on them. Next up is Sierra Resources Limited, or SYAAF on the over-the-counter, or SYR on the Australian Stock Exchange.
They were founded in 2007 and they IPO'd in 2013. Their CEO is Sean Werner, and they have 600 employees and they're based in Melbourne, Australia.
They have a market cap of $302 million, and their main mineral is graphite at 350,000 tons a year from Mozambique, Africa, which is temporarily been suspended since March due to COVID.
In Q3, they had a revenue of $2.3 million, and they have $43 million of cash on hand. Here's the 10-year stock chart since their inception. And we do hold stock in Sierra Resources.
Sierra is on track to be the first vertically integrated producer of natural graphite for the active anode material outside of China. Now, before we get to this next company, Eric, I wanted to ask you about your take on Tesla's Battery Day in September, because while we understood most of the battery talk, the mining portion was confusing. So what was your take on Battery Day?
It's phenomenal. The amount of innovation that was proposed during the Battery Day, it's phenomenal. And, you know, I've read, probably like you, I've read a lot of books on Elon Musk and how Tesla started with JB Straubel. You know, it started easy. Like it was, okay, let's put the cells in the 7,000 cells in the car and it will work. Now they're getting in the real game, you know, they're trying to improve what is stuff that very smart people are doing since already some decades, you know. So now they're getting in the real innovation of manufacturing, and we'll see if they are successful. Never bet against Elon Musk, I agree with you, but everything they were proposing is something very difficult to achieve and that need to achieve, and they have the right people and they have the right mindset to make it happen. In regard to the anode side, that was the last part of discussion. We were watching the Battery Day with some team members in the company, and when he announced that the silicon will be more and more added to the anode material to improve range, we all cheered, said, yeah, that's a very good news for us guys. Yes, sir. Everyone were instantly happy because it means that Tesla is not trying to change the technology in regard to the chemistry. The chemistry will stay lithium ion for a while, and they are just reinvesting in it. You know, they have some strategy to diversify the cathode material to help on the procurement side because they have some worries on the nickel side. So LFP, there's no nickel, so it's good to diversify the cathode side. But the anode side will always be graphite with silicon. Today they're using 5-7% of silicon, and they're planning to add up to 20-30% of silicon. Seriously, as I said, do we want to produce 100 million ton of graphite for the whole world to electrify the whole fleet in the future, or 70 million if it's 30% silicon? Doesn't really matter. Graphite will just incrementally be needed more and more and more in the future. So it's a very good thing that Tesla is reinvesting, restating that this is the technology for the future.
Okay, so next up is Piedmont Lithium, and I have a question for you, Eric. After Battery Day, there was speculation that Tesla might buy a lithium company or at least start doing lithium mining themselves. So do you think that Tesla might buy Piedmont?
I don't know exactly what is the strategy of Tesla, obviously, but when you look at it, they cannot deploy capital everywhere in the supply chain. It is unrealistic. They already have a lot of capital to deploy and to control the cell making. That's already quite a challenge. So I don't see them coming and finance a lithium mine, a lithium conversion plant, a graphite mine, an anode conversion plant. It's too much capital for a single company. Personally, that's what I believe. I know the guys at Piedmont Lithium have built the right team there, and they can do it. And I think that's what we've seen in the Piedmont situation. They were able to secure a long-term supply agreement, and I believe that's what they should do. They should be there in the supply chain, offer the comfort that the investor need to write checks to build projects. And that's what we see in Piedmont. So that I think they are playing their role there.
Interesting. So let's dive into Piedmont because now I'm super interested to learn more.
All right, so Piedmont Lithium, or PLL, on the NASDAQ and the Australian Stock Exchange.
They're founded in 1983 and they IPO'd in May of 2018. Their CEO is Keith Phillips. They have about 20 employees and they're based in Australia, although their mine is in North Carolina.
They have a market cap of $362 million and they have about $21 million in cash on hand. So they're looking at pre-production of 23,000 tons per year of lithium, and this is spodumene concentrate. Then when they get to their full production target in 2022, they're looking at 160,000 tons a year. Their current mine life is 25 years. They have revenue right now of zero, but they do have a deal with Tesla, and about a third of their production will be sold to Tesla.
Here's a look at their one-year stock chart, and we do hold stock in Piedmont Lithium.
All right, so about 60 to 70% of the demand for lithium today is for EVs.
Wow.
Now, China produces 83% of lithium hydroxide today. So lithium had a huge oversupply when China started producing a lot of it in 2018. And so as you can see from this chart here, the price of lithium plummeted in 2018. So many small lithium companies suffered. So there are still weak prices today of about $6,000 a ton, down from the peak of about $26,000 a ton in 2018. As I mentioned, Tesla and Piedmont have announced a deal in September for a 5-year fixed price supply, and that has a 5-year extension option on it that will start deliveries between the summer of 2022 and the summer of 2023. Tesla will start making their own lithium hydroxide, and Piedmont will be the supplier of the spodumene concentrate for that lithium hydroxide plant in Texas. Piedmont has the only U.S. spodumene deposit located in North Carolina, which is a 30-mile long by 1-mile wide belt of spodumene that is one of the highest concentrates in the United States. So what's interesting about Piedmont being located in North Carolina, because you might say, well, that sounds like an expensive place to have a mine. There are no mining royalties in North Carolina, whereas in Australia and Nevada, there's a 5% mining royalty that you have to pay to the government. So right off the bat, they're saving 5%.
Wow.
And Piedmont will also be upscaling that lithium spodumene to lithium hydroxide at their North Carolina plant.
So Piedmont is doing lithium spodumene versus, again, the brine that we talked about in Chile.
Right.
So they're two different things. Can you just, again, explain that to us so we really understand it?
So the brine that's pumped out and into these brine ponds and allowed to evaporate, and that takes about 18 months, those are in places like Chile with SQM. And this accounts for about 40% of worldwide lithium production. Spodumene makes about 50% or more of all lithium production, and it almost all comes from Australia today. When it's quarried, you get about a 1.25% lithium concentration in what you pull out of the ground, and then you refine it to get a 6% concentrate. And this is all done with a fairly simple process without really the need for any acids.
Okay.
So when you're done getting it up to 6%, it's called SC6, and that is the traded commodity. Fun fact here, spodumene mining originated in North Carolina in the 1950s, and virtually all the world's lithium came from North Carolina from the 1950s to the 1980s until China started getting into the game.
And so again, when we're talking about lithium, one of the interesting things here is that there's a difference between the brine mining and the spodumene mining, is that spodumene takes only about a year from the start of mining to get SC6 out of the ground and shipped off to wherever it's going. This is very different than the brine mining, which takes years to set up.
Yeah, and it's also cheaper to make lithium hydroxide from spodumene than it is to make it from brine. And also an advantage that Piedmont has is that they can sell the byproducts of this lithium mining to make other things. Like, for instance, they get quartz, which they can sell nearby in North Carolina to other industries that make things like solar glass.
Interesting. All right, so that wraps up just about all the companies that we were able to do research on. There might be some more, but this is a big bulk of them. So Eric, I have a question for you. We are typically long-term investors. Is this a smart move with mining company investing, or should we be looking to get in and get out quick?
That's a good question, actually. Sometimes it depends. Sometimes there's over-excitement too early in mining projects, and sometimes it's undervalued and it should not, So it's difficult to gauge, but mining investors, the most successful one are the long-term investors, especially the one we have in our company. The Pallinger's group is a good example. These guys want to deploy hundreds of $millions. So when you deploy that kind of money, you need to take your time and you need to do it right. Because mining is cyclical. So you need to invest when no one else is doing it. Position yourself in the supply chain when no one else is doing it. And they're very smart about it. They just purchased with the Quebec government the Nemaska lithium asset. They've positioned themselves in our company, and they are truly instrumental in making sure we do all the right steps. They are a true mines builder who did it numerous times in the past. And they are thinking exactly like you, Zach. They are thinking 10 years time frame when the cycle will be much more interesting and in a hype. That will be the right time, probably in 10 years from now, when the project will be fully producing at the best EV EBITDA possible. And that's when you exit. So, but you need, it depends the amount of capital also you want to invest and the size of the company. That's all stuff you need to look,
That's interesting. We've really enjoyed your fun videos featuring you and Rick from Rick and Morty to get Elon's attention there. Let's just check one out here.
Dear Elon, my name is Eric, CEO and founder of Nouveau Monde Graphite. I'm writing you this letter to tell you we found millions of tons of graphite, enough to produce trillions of pencils. But these days, who needs that many pencils? What we really need is a change towards cleaner energy and more massive lithium-ion batteries that can drive themselves. We want to partner up with the EV industry to supply our kick-ass graphite to you guys so you can continue the electric revolution. My English isn't perfect, but our product is. So Rick, what does it say?
99.95% pure.
Battery grade, but I guess you expected that. Thanks, Rick.
You got it, Rick.
What you didn't expect is that we are building the first all-electric open-pit mining project in the world. Zero-emission graphite. And the best part? We're located in Quebec, Canada. Bonjour les voisins. Want to know more? Just give us a call.
We're up, guys.
He's gonna call. Hey, good job, guys. Any minute. I'm pretty sure about that. Pretty sure. Eric speaking. Ah, man. Écoute, je t'ai dit de pas m'appeler au bureau. J'attends un appel important, là. Attention, c'est que c'était lui.
So my question is, has Elon called yet?
Obviously, we cannot go in any specifics with the customer. We were just using public information to make fun of a situation, but obviously, this is Elon Musk is kind of a figure in this space. I think he's doing a tremendous, great work out there, and it's great for us just to do a bit of a clin d'œil, we say in French, to the work he's doing, and hopefully he saw my video.
All right. Well, he can't tell us too much. That's,
Yeah, I mean, I don't think he could tell us even if Elon had called. So
Right.
We'll just have to hope that he did. Now, you can see the whole interview with Eric, and I urge you to because it's full of great information, not only about Nouveau Monde, which we're very bullish on, but also mining in general, the pitfalls and what to look for.
This interview is available today on our new channel called Disruptive Investing. We will feature content like interviews with startup founders and company CEOs in sectors that are disruptive.
I mean, historically, disruptive technologies are the least understood.
But they can be the fastest growing.
Our Disruptive Investing channel is all about helping you find the next disruptive companies to invest in.
So we hope that you'll go check that out and subscribe for more awesome content coming up. And also consider supporting us on Patreon at patreon.com/nowyouknow. And one of the ways you can help support us is by joining the Now You Know Investor Club on Patreon. Our Now You Know Investor Club gets exclusive access to monthly live streams with not only Zac and I, but also with company CEOs.
And you'll be able to join our Now You Know Investor Club Slack, where we have over 60 channels and over 800 members discussing almost every investment topic. And I go on there regularly to find out things that I didn't know about.
And it's so much better than just like a general investing group because everyone on that Slack watches this channel, which means that they all understand EVs. And as we know, EVs are one of the biggest disruptions that are going to be happening in the next few years. And it's, of course, it's a great investment opportunity. So everyone is on board with that. There's no like, well, I don't know, EVs probably aren't going to do anything. No, everyone is on the same page. They're like, okay, EVs is the future. That's fully understood. Now, which companies are the ones that we should be talking about?
Yeah, I mean, we have a hydrogen channel, but it's a green hydrogen channel. I mean, what other investment group has that?
Yeah.
So join us today on Patreon.
And thank you so much for watching this episode. We hope you enjoyed it. Hit that like button. It'll get some other people who might have never heard of investing in mining companies to put into batteries that are going to then be put into electric cars. People need to hear this stuff because, well, this could be the future and there could be huge benefits to them.
Yeah, we've been talking about Nouveau Monde graphite mine for a couple of years now, and we've gotten a lot of people who've thanked us for that because, as you saw from the stock chart, they've made a lot of money. And there's a lot more money to be made. You just have to know where to look.
And you can definitely find out more by hitting the subscribe button. We do in-depth every single week on a variety of different topics. We've been going on an investment rampage through all the EV companies from cars to dirt. And
it's been hours of research. So thank you so much for supporting us because there's no other way we could have done this for you.
We'll see you next week.
Now you know.